Good morning and welcome back to Almus Market Mornings. There are two broad camps. One's like Chair Powell remaining cautious on tariffs and its impact on inflation, the other being the likes of Stephen Miran, who believes that tariffs don't cause inflation. Today, as we head into the CPI, markets have positioned themselves for two rate cuts by the Fed this year. The CPI print will be in the backdrop of a few important tariff updates. President Trump has extended the 90-day truce with China. He has also clarified that gold imports will not be tariffed. Let's move to JK, who is in the US now and I assume with a jet lag. Good morning, JK. What are your thoughts on these updates?
Thank you, Swaraj. It's not been so bad. I think what we are seeing on the monetary policy, definitely uh, Stephen Miran joining the board will add to the Dow camps, but it's still not enough, actually to tilt the balance in favor of a rate cut. If you look at the majority of the Fed members, because in the 18-member board, the Dows are still in the minority. Although yesterday also Bowman said that the latest employment data has increased the chances for a rate cut, and housing demand appears to be on the weakest side since the financial crisis, and core inflation or core PC inflation appears to be moving closer to 2% target. So there is increasing support for a rate cut, but probably it's not enough. And I would say that the Fed, on the balance, would still be open. So in this context, the inflation number today is assuming a lot of importance because the CPI number, like in June, is also expected to be higher in July, on both on the headline and the month-on-month basis. And this is probably going to reflect the impact of tariffs on inflation data, and puts the Fed decision in a slightly difficult stance, because they will be caught between sharply slowing inflation, sharply slowing job market, and the rising inflation. Of course, there is always the political pressure, though not, though not so far they have yielded to it. In case there is surprise lower inflation, we will see increases in chances of more than two hikes this year. Sorry, two cuts this year rather. I think this number assumes a lot of importance in this context. We also, of course, have the Australian rate cut decision today. Following weaker than expected inflation number, there is almost a certainty that Australia will be cutting their rate by 0.25%. India inflation is also expected, and then it is expected to hit 8-year low of 1.76%. Although I'm not very sure if it will lead to another rate cut by RBI, just going by governor's statement, who focused on the trend in the upcoming quarters rather than going by the current numbers. Of course, Rupee uh, would be more looking at the US CPI than the domestic CPI number. As far as the tariff issue is concerned, yes, it was a relief to see Trump issuing a categorical statement that gold will not be imposed with tariff, and that has led to gold giving up most of its gains that was seen on Friday, particularly in the futures market. And the spot gold, of course, continues to move between 3,300 and 3,400. Technically looking, like one more stab on the downside is very much possible. Uh, Trump and extending the deadline for Chinese tariffs by another 90 days is a positive sign, in the sense that it shows an intent to arrive at a more amicable trade deal between the two countries. And there are, statements from Chinese counterpart also saying that, they will be easing a number of non-tariff barriers from their side, whereas semiconductor exporters from US, the specialties means semiconductor chips that they are exporting to China, they have agreed to give 15% of their revenue to the government in return for being allowed to export it to China. So this, in some way or the other, Trump is continuing to increase the revenue for the government through the tariffs, and also either that or he is getting commitments from large countries like Japan and Europe for huge investments. And let's not forget that even Apple has agreed to invest more than 500 billion for installing a production facility in the US for the Apple phones. Speaking of Japan, of course, today we had the Japanese Nikkei hit a new all-time high, and that has been, supported by continued investor confidence in US-Japan trade tensions, more weakness in the yen, giving carry traders another boost, and also strong earnings momentum in Japan. Japanese companies have also added to it. So overall, the risk sentiment continues to be, on the positive side. Although yesterday US market did give up some gains, but overall Asian markets have been looking good, and risk sentiment so far has not really taken any dent. Even in India, it seems to be slightly getting a better boost. In fact, the reports indicate that month of July has recorded one of the highest flows for the mutual funds in India. So the domestic investors are quite still confident about India's medium-term prospects as far as the equity market is concerned. Although overall economy is definitely going to face some challenges in the near term because of the tariff issue. In fact, yesterday's rupee gaining initially on the back of indications that Russia-Ukraine war peace talks are somewhat on the positive side. I mean, that would in fact lead to the penal tariff that of 25% being imposed on India if there is a ceasefire, and that was the basis on which there was some rally in the rupee as well. However, as has been the case of late, the dip was immediately latched onto by importers for hedging, and it is not a surprise. And let's not forget that even if that penal rate of 25% is taken out, we still are subject to 25% tariff, and that is a huge, or rather, I would say, it's a long trip to get that addressed to a lower level, because the differences between US and India are widening. Although we are headed into talk between Indian and US trade team later in this month. So rupee continues to find decent resistance at 87.40. At the same time, support also comes at 87.70 because of selling by RBI for the dollar. So it's still being kept in a very narrow range due to efforts of RBI and the demand on the downside. As I said, India's CPI very unlikely to influence the rupee to any great extent. Among other currencies, euro actually given up some of the gains. Of course, I feel looking at technical positioning of the technical charts of the euro, feel one more stab on the downside is very likely, and we are seeing some lower highs and lower bottom perhaps will be confirmed if we break through 1.14, and that can lead to a much sharper correction in the euro towards 1.12, and that would be a very healthy sign. For gold, of course, as I said, because of the denial of tariffs on gold imports, gold prices have eased off. Possible test of 3,300 in gold is also very likely. So all in all, I think tariff news continues to somewhat be on the positive side now, and the CPI inflation number holds the key for the market moves. Actually, thank you.
Thank you, JK. And it seems inflation numbers will be in the limelight if the CPI is higher than expected for the month of July. It is expected to be higher in July, both on the headline and month-on-month basis. And if it's higher than that, it would be tricky for the Fed since they would face higher inflation and weakening economy. And if the inflation numbers are lower, the rate cut probabilities could go up to reflect up to 3 rate cuts this year. Indian inflation is expected at 1.76%. It's supposed to be released today. When it comes to the tariffs, gold will not be imposed with tariff, as said by President Trump. Even the Chinese tariff deadline would be extended by 90 days. In the meanwhile, AMD and Nvidia have been allowed to export some of their chips to China with a revenue sharing agreement with the US government. These wouldn't be their flagship chips, but the older versions. When it comes to risk sentiment, overall, it seems positive today. Japanese Nikkei hit all-time high. US markets gave up some of the gains, but even the Indian markets today seem quite decently poised. Rupee gained initially yesterday. However, during the day, dollar buys pulled up the USDINR towards 87.70. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.